Hi guys, Mortgage Mark. Let's talk about just generic questions we get about credit. First of all, what is a FICO score? Well, the mortgage world uses a FICO scoring model. So it's just how they come up with the credit scores. As a consumer, like when you pull a credit report from just a generic like monitoring site, we'll say they're going to have different scores because they use a different scoring model. So the mortgage world uses a FICO score. So why do you have 3 credit scores, guys? Well, in the mortgage world, there's typically 3, not always, but most of the time there's always 3 scores. If somebody doesn't have any activity with the bureau, that's why they don't have 3 scores. But for the general population, you all have 3 scores. It's Experian, TransUnion, and Equifax. Those are the 3 credit bureaus. So when we pull a credit report, the mortgage world is going to throw out the highest one, throw out the lowest one, and we use your middle score. And there's no way to, it's whatever the scoring model has. It's not to say like, oh, TransUnion is always the lowest. No, it's just whatever that middle score is, doesn't matter. If there's 2 borrowers, meaning 2 people are trying to get a loan together, the mortgage industry is basing their credit scores off the lower mid score of 2 individuals. Does it hurt you when you get your credit pulled? Not really, guys. I mean, it can in like extreme circumstances where somebody has like little to no credit, or maybe they're just so borderline that one inquiry could hurt them. Maybe, but typically that's more for revolving debt, like the bad kind of debt, and not so much for like mortgages and car loans. So does it hurt your scores? No, not when we're doing it. Generically speaking, again, it's something that they think about it this way. The credit bureaus aren't designed to hurt you. They want to make sure you can be an informed consumer. Just because, you know, the first mortgage guy pulls your credit, they don't want to have you be beholden or trapped to have to use that guy. They want you to shop around and have that option to do so without hurting your credit. So when you shop for cars and mortgages, those big ticket items, it's not going to hurt to go do multiple inquiries. Look, another question is, how much does it cost? Well, most of the time for most mortgage companies, it doesn't cost you anything. It'll cost us some money. And if you close, you're going to end up paying for it. Call it like $35-ish for 2 people. Maybe it's like 17 to 20. But I would say generically speaking, call it about $20 per person. You don't pay it until you go to closing. So if somebody calls to get pre-qualified with us and they don't qualify, we eat that cost. It is what it is, cost of doing business. But for us to pull it, no cost to you until you close. So if you pull it through a third-party website, no telling, guys. It could be free, it could be not free. There is a way where you can go directly to the bureaus themselves and you get an annual free credit report and it's yours. It will not have scores. So the purpose of that is just to make sure you see the activity and know what's coming on the report. You can go to the free credit report link. It's sponsored by Uncle Sam, to where you get that free credit inquiry. You get 1 a year from each bureau, so you can kind of do it maybe every 4 months. But I would also look into credit fraud monitoring systems. So in other words, you can pay a third party and they'll watch it and monitor it for you. You can do credit freeze. There's a whole nother video on that, so check that out. Hey guys, down below there's more frequently asked questions. They're pretty esoteric, meaning like not everybody has these questions, so they're less common. Check out the information down below. It answers it. If you have questions, call us. But really and truly, they're just so specific. We're not going to waste a whole bunch of time here on them. But if you do have questions, let us know. We appreciate your time. Thanks for watching.